Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good weekend, all. Ira Epstein of Linn Associates with your weekend edition of this agriculture update for Friday, the 31st of August, 2018, and we're just after 3:40 in the afternoon. But this is the close in the grain markets, and it was a big up day in soybeans, the wheat market, and the corn. Now, one of the things that the markets will be looking at, of course, is we're getting closer to harvest. Now we're into September. The second thing is that this is a very important week because I think it's September 3rd that the Russians, their ag ministry, is calling in the exporters to see how much has been exported and whether or not levies are going to be put on grain exports into Europe. Now, if that is the case, it gives American wheat a leg up here. There'll be a bid for that wheat if that takes place because we're much cheaper than European wheat. So that will be the key, depending, of course, on what? How big the levies are. You don't know. But the point is that the European situation in wheat got very bad, and that's what the market's looking at. The NAFTA deal with Canada fell apart at the end of the day today. Don't know if the president intentionally let out to a Bloomberg reporter certain parts of the negotiation, but it certainly didn't sit well, or it was used as an excuse. You just never know. Remember, they're our big trade partner. The areas that we're looking at is what they call supply management in Canada, where it's basically they're trying to put huge levies on us getting into their dairy industry by exporting dairy product there. One of the other areas, of course, is the contention as to how do you go to what's called a dispute area if something goes amiss. And they want to keep certain ways in that are there now, and the President of America does not want to. And therefore, those are the areas I think you're going to see give and take between the two countries to try to make a move. It won't matter. The President today is notifying Congress that he's going ahead with signing a deal with Mexico. He wants to get that done while the current President of Mexico, who is seated, will sign it. Not to get into the new Congress of Mexico if you can do it. And along the way, if Canada wants to join in, they're more than welcome. Congress here wants to see a trilateral agreement. So as we take a look at everything going on, you can see how the monthly bar, you've gone down to 810.5 is a low on the market, and here you are, 833 again. This week's low got to 816, so you didn't get too far away from those lows. If we look on the weekly bar chart, you've had an extension to the downside. Admittedly, the market came back and closed near the highs of the week. If we look at the high of this week at 840 and we look at the low of last week at 840 3/4, there's a 0.75% gap. The market might want to fill that gap. Gaps on charts, if you'll go back and look at them, normally get filled. So that's what I'm looking for to happen as a technician. Even filling that gap, you'd have to get over 896 on the current pattern on the weekly charts in order to keep anything but from the weekly point of view, lower highs and lower lows in place, which is bearish. The 18-week moving average of closes when we reopen on Tuesday. Remember, grains will reopen on Tuesday. That's going to be very, very important for what we see in the market. Is it going to be able to fall down near that 896 zone and offer the resistance? The market's been falling. If you take a look, about 10 cents a shot here. I don't think it's going to stop, so it's going to be very, very close to that number. I don't think it's going to be under it, but close to it. As we go to the Bollinger Bands, they're really not in play unless you take out the lows of this week, because if you took them out, the odds would favor the market will make a run for the lowest low we've had, and the question is, are there any stops under there? And in terms of momentum, the momentum is still pointing to the downside in this market. It has not turned on the weekly chart. Meal market, momentum is still pointing down. Now, the pattern has been one of a higher high and a lower low, and that's been in place for about a month at this point. Resistance back up at 328. So far, no reason for this market to be lifting off of it on the meal chart for the weekly basis. As we go to soybean oil, you just have a market that's drifting sideways right here. And as it's doing so, the momentum is just not picking up. It hasn't come out of this area and started to point up yet. So you still have an overall bearish market, even though on the daily chart, you've gotten a buy signal going out at the end of the week. Now, when I say buy, not a buy, but bullish signal. The market's over the 18-day average of closes. The swing line is higher, and momentum's trying to point up on there. You decide if that's a buy signal. On the corn market, I'm looking at a lower low and a higher high. No trend. I'm looking at a market that still has downside momentum. It came back and was able to close with some gain this week. If the market can rally from here, you do have the potential then of higher lows. All you need to do is take out this week's high to have that, and you've already got the higher highs. That could put in the 361 to 368 zone as a resistance figure. Getting there would require a dime move. Pretty good in the market. In the wheat market, if we look, we closed 518.5, literally just slightly under the 18-day average of 519.25. Momentum down. The swing line is pointing up with higher lows and higher highs. In the cocoa market, the pattern remains one of lower highs, lower lows. That's bearish, but momentum turned up. And if you believe that momentum turns ahead of price, then that's saying that if momentum continues, the market might be on line to challenge the 18-week moving average of closes. This market, because you're under the 18-week, keeps the bias down. In the sugar market, we've had a long-term pattern of lower highs, lower lows. We hit the lower Bollinger Band, we get a bounce, and then we seem to go back down to it. I don't see that pattern yet changing. In the coffee market, the rally failed to even get up to the 18-week average of closes, and momentum came right back down. I'll say that market's still in the bear camp. In the cotton market, no sign of relief yet in the market, but it's a funny chart pattern. It's a higher high, a lower low. You hit the lower Bollinger Band. You got a 2-week bounce, and the market hasn't really done anything, up 50 points, yet momentum is still pointing to the downside. In the cattle market, we've had a pattern of a lower low and a higher high. And since then, do you realize how many weeks in a row we have hit this 18-week average as the market's trying to figure out what to do? It's not getting a move very big up or down. And because of that, the Bollinger Bands are really coming in and pushing in on that market. As they come in, the market probably goes sideways for a bit. And if it does that, it will set up whatever the next trend is going to be. In the hog market, the hogs have a pattern of lower highs and lower lows. Now, the big news in hogs is going to be that China has now got a major outbreak of swine flu. At first, people thought, the U.S. and China, that's going to help the trade in pork. They're looking elsewhere. They're not looking at America. What America's looking to do is put $200 billion of tariffs this coming week on Chinese goods. Now, whether the president does it in tranches or does it all at one time, I don't know. But China's preparing another $60 billion in tariffs the moment we make our move. I don't see that helping the hog trade. You put it all together, you get a lot of interest, and we write about that in our newsletter. Now, in our newsletter, for those of you that trade agriculture, we really do a lot of research on it. And that research doesn't begin on Monday mornings. It begins over the weekend. Even late at night tonight, we have people that will be writing reports. They'll come to even over the Labor Day holiday as they're working on it. You know, just because America's celebrating doesn't mean that other countries aren't up and trading. We cover all these areas, and we write it in a way for traders that want to deal with hedging, options, futures, and speculating, of course. How do you get this? Well, it's pretty simple. And we cover weather, and we cover who's buying, who's doing the selling, what's going on. Give us a call. You can go to our website. From the website, you just click on one of our free offers. It'll take you, actually, when you get to the website, you'll see a carousel of free offers. Click any of them, and you can choose from this. You can always get there by clicking right up here as well. I'm Ira Epstein. You have a great day and a great holiday. I'll see everybody Tuesday morning.